You know, it's hard to escape this feeling lately, isn't it?
What's fun exactly?
Well, like we're wading through just constant change and all the information, the news. It feels more like fog than light sometimes.
Oh, absolutely. Yeah. Trying to sort through the headlines, figure out what's really shifting underneath.
Yeah,
It's a challenge for everyone, I think.
exactly. And that's really what we try to do here on the deep dive. We dig into the reports, the data, the history, all that stuff,
Hmm.
and pull out the key insights, make sense of it for you, like a curated guide to what actually matters.
And today, we've got quite a task ahead of us.
Yeah.
We're aiming to get a much clearer picture of, well, the whole geopolitical and economic scene right now.
Yeah.
We've been deep in this big new report, but also looking at thinkers, past and present, and some financial charts, too.
Right. So it's a real mix. We've got this in-depth analysis, then wisdom from different eras, plus, like you said, hard financial data. It's about getting that wider view, seeing it from different angles. So the big questions we're really wrestling with today are pretty fundamental. Is the world genuinely shifting towards, like, a multipolar system, multiple centers of power?
Yeah, and what comes with that? The opportunities, sure, but also, let's be honest, the dangers.
Definitely the dangers. And then what does this mean for the economy? What kind of fallout or ripples might we see?
Okay, so where should we start? The report itself.
Yeah, let's dive in there. The report kicks off with a pretty bold claim, doesn't it?
It really does. It argues that this whole idea of a unipolar world, led solely by the U.S.,
Hmm.
it's not just a pipe dream. It's actually dangerous.
And it brings in some interesting voices to back that up, like Louis Brandeis,
Yes.
warning that the biggest threats to liberty often come disguised as benefits from governments acting with good intentions, but overreaching.
That resonates. And it connects to what Samantha Power observed, too, about how often humanitarianism gets used as a kind of cover
Right.
for strategic interests, which can lead to interventions that, well, backfire
Hmm.
badly.
Yeah. Unintended consequences. And then there's G.K. Chesterton.
Yeah.
His point about human dignity being the bedrock of human rights.
Hmm. And Aristotle's idea, or the idea linked to him, that honor isn't just about getting accolades. It's about deserving them.
Which really speaks to maybe a need for more humility in international relations, a bit more genuine respect between nations.
I think so. And the report digs into that whole complex dance between economic power and geopolitical clout. It presents a few different takes.
Like Max Balkis suggesting that strong economies, often starting with trade, they naturally lead to stronger political alliances.
Yeah, so economic links pave the way for political closeness. That's one view.
But then you've got Meltem Demirors with, a much more skeptical perspective.
Definitely. She argues that money isn't some neutral thing managed by governments for the public good. No, it's actually driven by private agendas, by the quest for geopolitical power itself.
So finance as a tool of power, basically, not just a byproduct.
Exactly. It's a different lens. And then Robert Kagan shifts the focus again. He argues that the big power struggles, they usually start with geopolitics itself, rivalries, security concerns, not necessarily economic competition first.
It's fascinating, isn't it? How your starting point, economics first or politics first, totally shapes how you see global links.
Absolutely. Now, the report also spends some time on Zbigniew Brzezinski's ideas. Very influential.
Oh, definitely. His view of Eurasia as the chief geopolitical prize.
That's the famous phrase. And he specifically highlighted Ukraine's critical role. He thought an independent Ukraine was essential for, well, changing Russia and stopping a new Eurasian empire from forming.
Which gives some pretty important historical context for today, doesn't it?
No question. And Brzezinski also pointed to a potential future problem for the U.S.
What was that?
As the U.S. becomes more diverse, more multicultural, he worried it might get harder to build a solid consensus on foreign policy, especially if there isn't some big, obvious external threat to unite everyone.
Wow, that feels incredibly relevant right now, thinking about the divisions we see today.
It really does. Quite
Right.
prescient. The report also throws in a question from Herbert Spencer, basically asking, what kind of society are we actually building with all our political actions? Something he felt leaders often ignored.
A fundamental question.
And then Tolstoy's very blunt take, that governments, not people, are the ones who start wars. The people just end up paying the price.
So this whole first part really sets the scene, challenging that single superpower idea and showing just how tangled up economics and geopolitics are, drawing on all these different thinkers.
Yeah, it lays a really interesting foundation. And then the report takes a bit of a personal turn, exploring some of the intellectual influences on the author.
Right, like Professor Michael Suger's lectures on Western philosophy.
Yes, the author mentions being impressed by Suguru's scholarship, even if he speaks incredibly fast. It seems like that philosophical grounding was important for the author's analysis.
And then there's Eric Fromm. The author reread his work on humanistic socialism.
Humanistic and democratic socialism, yeah.
Yeah.
And Fromm's deep worry about our capacity for self-destruction. That famous Mike Wallace interview where he really stressed that point.
It's a pretty dark view, Fromm's. Sobering.
It is. But then the report contrasts Fromm with Viktor Frankl.
Ah, Frankl, logotherapy, the search for meaning.
Exactly. Frankl's focus on finding meaning as the core human drive, even in the absolute worst circumstances, and his sense of humor, remarkably. You see it in his interviews, in Man's Search for Meaning.
It's such a powerful counterpoint to Fromm's pessimism, isn't it? That emphasis on resilience and meaning.
It really is. It offers a different kind of lens, maybe a more hopeful one. Okay, so after setting that philosophical stage, the deep dive shifts back to geopolitics, specifically through the eyes of economist Jeffrey Sachs.
Jeffrey Sachs, big name. And his recent article, The West's False Narrative About Russia and China.
Yeah, the report really leans into Sachs's main point, that the West's story, we're the good guys, they're the bad guys, is way too simple.
And dangerous, Sachs argues.
Dangerous, because it gets in the way of diplomacy. It promotes this military-first thinking in U.S. policy.
And Sachs backs this up by pointing to the sheer number of U.S. military interventions since, 1991?
Over 100, according to the sources he cites. It's a stark number, and he talks about his own experiences working in Russia, Central Europe, China.
Right, firsthand experience.
And he's quite direct about NATO expansion. He thinks the Ukraine war could potentially have been avoided if there had been serious diplomacy about it. Says he even tried to get the White House to engage on it.
And he sees parallels now in East Asia with Taiwan.
He does. He worries the U.S. is using a similar playbook, building alliances, boosting military aid, talking tough, and that it risks provoking another major conflict there.
It definitely makes you wonder about repeating patterns.
For sure. Then the report brings in Juan Gonzalez's take on the shifting economic balance.
Yes, the rise of the BRICS nations, Brazil, Russia, India, China, South Africa.
Gonzalez points out that economically, they're now actually bigger combined GDP than the G7 countries. There's even a map showing their global spread.
That's a significant shift, and Sachs seems to agree, saying that the old Western idea of we run the world just doesn't fit reality anymore.
Not with the growth we've seen elsewhere since the 50s.
Yeah.
The report shows data on things like mobile internet users globally, and another map illustrating that it's not the whole world sanctioning Russia. It underscores how much things have changed.
Yeah, and it touches on this undercurrent of resentment, particularly in the U.S., about China's economic success. There's data showing the middle class growing much faster in BRICS countries than in the G7.
That shift in economic gravity is undeniable. The report contrasts warnings to China from people like Liz Truss or Admiral Radican with critiques like the one from India's Subrahmanyam Jaishankar, who basically accuses the West of applying its rules-based order selectively when it suits them.
So different views on how the global game is or should be played.
Definitely. And Sachs puts it bluntly. The U.S. is about 4% of the world's population, he says, and needs to learn to play in the sandbox peacefully.
Quite an image.
Yeah. The report also mentions that axis of evil, or dictators club, framing you see in Western media for Russia and China, and contrasts it with how differently the world reacted to Queen Elizabeth's death, for instance.
Right, showing a more complex global picture.
And it briefly touches on historical context, too, things like the Mao Rebellion, the Boer War camps, just to add nuance to the history of Western global power.
So Sachs is painting this picture of a U.S. foreign policy maybe stuck in the past, fueling tensions, while the world's economic foundations are fundamentally changing.
That's the gist of it. And then, interestingly, the report pivots to look at the economy again, but this time through the lens of potential global conflict, introducing Simon Hunt.
Simon Hunt, known for his expertise in the copper market, right, which is often seen as a bellwether for the global economy.
Exactly, Dr. Copper. And Hunt's view is, well, it's stark. He believes we're already in World War III.
Already in it. Wow.
Yeah. And he argues the big focus for policymakers, for central banks, is going to shift away from just fighting inflation.
Towards what?
Towards managing the economic fallout from war. from these escalating conflicts.
Okay. And what conflicts is he most worried about?
He points to three main risks: Ukraine spreading further, a China-Taiwan conflict, and tensions between Israel and Iran flaring up. He even expects a major escalation in Europe this autumn.
That's quite alarming, and he thinks markets aren't pricing this in yet.
Not fully, no. He sees central banks eventually having to step back in to stabilize things, even if inflation is still high. He predicts major disruptions, more inflation, currency volatility, market swings, supply chain chaos.
Some more QE, maybe.
He thinks so.
Yeah.
Initially, maybe commodity prices dip, but then they surge again.
Oh.
And ultimately, he sees all this leading to a global depression, something like 1929, 1932.
Goodness. And does he offer reasons for, say, Russia's actions?
He does. He points to NATO moving eastward, despite assurances given back in 1990, and the buildup of Ukrainian defenses in the Donbass. He also highlights the effort by BRICS Plus and the Eurasian Economic Union to build an alternative financial system.
One not dominated by the U.S. dollar?
Precisely. He thinks that alternative could be up and running within about 3 years. For Hunt, what's really at stake is America's ability to project power through its currency.
So what's his timeline for all this unfolding?
Okay, so he sees the global economy basically flatlining into early next year.
Wow.
By the end of this year, central banks get really worried about economic weakness, unemployment rising.
And then they pivot.
Then they pivot. Renewed QE. That sparks inflation again, pushes U.S. Treasury yields way up, leads to one final blow-off top in asset prices sometime in 2024.
A final surge.
A final surge, yeah. Followed by that severe depression. He talks about excess broad money being the real driver of the inflation we've seen, referencing a table in the report.
And he has specific predictions for oil, food prices.
Oh, yeah. He sees oil hitting at least $250 a barrel by mid-2024. Gas prices follow, obviously, and food inflation gets worse because of ongoing droughts. He also expects the U.S. dollar index to fall significantly.
So Hunt's scenario is more QE fuels a final speculative bubble, then escalating wars trigger a massive crash. That's a lot to take in.
It really is. Which brings us to a crucial point. Does the report's author actually buy into this blow-off top idea?
Yeah, what's the take there?
Well, interestingly, no. The author disagrees with Hunt's forecast of a final big asset price surge.
Why is that?
A key reason given is China. The argument is that China would be really hesitant to get into a major military conflict right now because they have significant economic problems at home.
Like the real estate market.
Exactly. The report highlights how shaky China's property sector looks, showing big stock price drops for major developers this year. It also mentions a shoe company seeing sales in China fall by half, and FedEx blaming its own weak earnings partly on slowdowns in Asia. The FedEx chart included doesn't exactly scream booming economy.
Okay, so China's internal issues might make them cautious. What else?
The idea of demand destruction. Prices get so high that people just stop buying stuff.
Right.
The report shows data on U.S. gasoline consumption falling, even when prices dipped a bit from their peak. It suggests high prices are genuinely pinching consumers.
Makes sense. People tighten their belts.
And the author seems to agree with economist David Rosenberg about the housing market pulling back. Higher mortgage rates, affordability issues, that's expected to hit consumer spending hard. There's a chart showing new home sales declining.
So instead of a blow-off top, what does the author see?
Maybe more like persistent, sticky inflation, inflation that hangs around. And that could lead central banks to keep raising interest rates, even if it's irregularly.
Which raises that huge question. What happens to the global property market then?
Exactly. Especially with a whole generation of homeowners who've basically only ever known interest rates going down. How do they cope if rates stay high for years?
That's a scary thought for a lot of people. Are they prepared?
Probably not. The report does touch on the idea that maybe rates stay negative in real terms below inflation, even if they go up nominally.
So asset prices could still rise on paper.
Potentially, in nominal terms. But inflation would be eating away at those gains.
Right, not real wealth creation.
But overall, the author seems skeptical about a big surge followed by more QE. They argue that if the Fed, say, did reverse course and start QE again, it might actually spook the bond market.
How so?
Fear of more inflation could cause bond investors to sell off, pushing long-term interest rates even higher, counteracting the QE. The chart shown for the long-term Treasury bond ETF already shows pretty significant losses.
Okay, that makes sense. Bond vigilantes, as they used to call them.
Kind of. And the report really emphasizes the massive levels of global debt we have now. Debt to GDP, stock market cap to GDP. The charts show we're at or near record highs.
Which limits options, right?
It raises a fundamental question. In a world this leveraged, can central banks actually create significant lasting inflation even if they try? Or does the debt burden just crush any recovery?
So, the author's view is more cautious. Slowdown, continued pressure on assets, no final speculative boom.
That seems to be the takeaway. More of a grind than a final explosion and crash. Which leads us, naturally, to strategies. Given this tricky outlook, what does the report suggest for, trying to minimize losses?
Right. What can you actually do?
Well, one suggestion is to trim exposure to the sectors that have had huge runs, think high-tech, the FNE stocks, those private unicorns, meme stocks, basically the bubble areas. It uses NVIDIA's sharp stock drop as an example.
Okay, reduce risk in the frothiest parts. What else?
Maybe move away from just holding broad index funds. Consider active managers who can be more selective, pick specific stocks or sectors rather than just buying the whole market.
And any areas look potentially interesting.
The report points towards emerging markets. They've generally underperformed the U.S. market for a while, so they might be relatively cheaper. There's a chart comparing the EM ETF to the S&P 500.
And the author mentions some specific holdings.
Yeah, some conglomerates based in Hong Kong and Singapore, like Jardine Cycle and Carriage and Swire Pacific. A chart for Swire is included. The thinking might be they're stable, diversified businesses in a region that could recover.
Okay. Any other potential bright spots?
It mentions Macau casinos and Hong Kong hotels and property potentially benefiting if COVID restrictions fully ease and travel returns.
Ah, the reopening play.
Kind of. It also shares an anecdote about an investor betting on Japanese banks, like Mitsubishi UFJ. There's a chart for them, too, thinking they'll benefit if Japanese interest rates finally start to rise.
Interesting angle. What about other regions?
Latin America is mentioned as maybe being a bit insulated from the worst of the direct Russia-China versus West tensions. It shows charts for Banco Macro and YPF in Argentina, and banks like Bradesco and Itaú Unibanco in Brazil.
So looking for value in less crowded places.
Seems like it. And finally, it circles back to precious metals. Still positive on gold and silver, especially the mining stocks, and also platinum. There's a chart showing silver's recent performance.
Okay. Metals as a potential hedge.
Yeah. And the report concludes with a nod to philosophy stoicism, quoting Seneca about how we often suffer more in imagination than reality, and realizing maybe we don't need all the stuff we think we do. A good mindset for potentially volatile times.
That's actually quite useful advice. So let's try and wrap this all up. What are the main takeaways from this really, really deep dive?
Okay, I think first there's this strong argument that the world is moving away from that U.S.-led unipolar model. That seems clear.
Right, a shift is happening.
Second, geopolitical tensions are definitely rising, and they carry real economic risks. Ukraine, Taiwan, Iran, these aren't just headlines. They could have major consequences.
Yeah, the connection between geopolitics and economics feels tighter than ever.
And third, there are these really contrasting views on what happens next economically. Simon Hunt's blow-off top than depression versus the author's more cautious, sticky inflation and slowdown. Big difference there.
Absolutely. So it really highlights just how complex and interconnected everything is right now. There are definitely no easy answers.
Not at all. It's messy, and things are changing fast.
So we really hope this discussion has given you some valuable perspectives to think about. We encourage you to reflect on these different viewpoints and consider how these big global trends might shape your own understanding, maybe even your decisions.
Definitely. And maybe one final thing for you to chew on. After hearing all this, what single factor do you personally think will be the most significant driver shaping the global landscape in the next few years?
That's a great question to ponder. Keep digging, keep seeking out different sources. We hope this deep dive was a helpful part of that process for you.